everyone, my name is Jennifer Peel. I'm here to showcase a listing that's currently on the market and it's available to purchase under seller financing. So in this video, I'll explain to you a little bit about what seller financing is, and then we'll break down the costs and see how this particular listing is favorable for buyers. But first, let's take a look at the listing itself, and let's take a look at some of the pictures. So here's a picture of the living room. It is a one-bedroom condo in Mo'iliili. The condo building is called Rainbow Place. There is window AC in every room. So there's one in the living room, one in the bedroom. The lanai expands from the living room to the bedroom, so it's a large lanai. And you can see the views are pretty nice. You get the city views and mountain views. And so this is the picture of the room. As you can see, a lot of windows. So even if you didn't want to use the window AC, you get that cross breeze. There's a washer and dryer in the unit, and it comes with 2 parking, which is very rare to find in Hawaii. Okay, so I'm going to explain just briefly and make it short what seller financing is. So it's an agreement between the buyer and seller. They come up to terms such as interest rates, down payment, purchase price, and they create a promissory note where the buyer promises to pay and fulfill these terms to the seller. Capital gains. So now I'm going to break down the seller financing structure of this particular listing and why it's favorable to buyers compared to going the conventional route, mainly because what this seller is offering is lower interest rate and possibly a lower down payment. So we're just going to review and see what this particular unit has to offer. Okay, so the purchase price for this unit at Rainbow Place is $450. Now the seller is asking for 20% down. She's offering interest rate of 5%, and there's a 5-year balloon payment. Again, the terms are negotiable. So on the other section right here, I broke it down. Your monthly payment would be just about $2,000 to pay to the seller. Your HOA for this particular property is $920. These are estimates regarding insurance and taxes, but $152, $105. So your total monthly payment is about $3,000, $3,100 for this particular 1-bedroom, 1-bath. So what does a balloon payment mean? The balloon payment means after 5 years, the principal payment is due, which is $330,583 as I listed there. How would that work? Well, after 5 years, you're going to talk to your mortgage, your lender, and get refinanced, pay off the seller, and you have this new mortgage. One benefit of going into a seller financing structure today and then, applying for a loan years after is what I listed on the sheet. So the idea is, in the end, you've been paying down the principal amount, gaining equity in the property. So your approval, your odds to get approved for a loan is much more favorable compared to now. So let's just play a scenario here. So let's say after 5 years, you purchase a property after 5 years, the property valued at $480, right? So the rental comps show that now this condo, the market value is $480. It can sell for $480. Great. But your loan that you own to the seller, at that time, the balloon payment is due, which is $331. So you have about $149,000 in equity. So when you think about it, when you're trying to get approved for a loan, how much down payment is required from the bank? 20%. For a conventional loan, it's 20%, right? So in this scenario, you have enough equity where you don't have to put a down payment. So when you get refinanced, you don't have to put those extra funds because the funds are in the property, and you take out the loan that's required to pay off the seller. And usually in these scenarios, when you have enough equity and if the equity is over 20%, there's no private mortgage insurance that you need to deal with, and you have a higher chance of getting better rates. Okay, so let's compare the seller financing structure offer, and then if you were to go through a normal loan, like through a normal loan officer and get a mortgage out. So in today's rate, the national average rate is about 6.9%. Okay. So I used a mortgage calculator online. I just took a screenshot and shared it. So if you can see, it's the same thing. The purchase price is $450. You put 20% down payment. I used the lowest interest rate that is listed on here, which is 6.9. And after all your expenses, your home insurance, your HOA, taxes, your monthly payments come out to be about $3,500. So if you compare, you're paying $3,500 here, and then under seller financing, you're paying about $3,100. So you're saving $400. You're paying $400 less a month. So I think that's another benefit. And again, on top of that, you're going to build the equity and pay off the seller eventually. So if you're a buyer and you feel like you're stuck, there's no other options out there, you're not going to get approved for a loan, I'm telling you that there is. Feel free to book a consultation with me. I'd love to hear your story, see how I can help you. We can even come up with a plan to get your finances in order, what you need to do to get approved for a loan in the near future. But until then, we can maybe do some research and figure out some other options out there, like this particular condo under seller financing. You never know. Check out my website. It's jenniferpeele.com, and feel free to book a free consultation. Thanks for watching. If you are interested in possibly purchasing this particular unit, go ahead and give me a call and we can further discuss. Okay? This is Jennifer Peele, keeping real estate appealing.